Now, consumer confidence in the economy is running deeper into negative territory. The latest FNB-sponsored Consumer Confidence Index worsened to -9 in the second quarter of 2017, and that's from a -5 figure in the first quarter. Lower confidence levels amongst consumers results in weaker business activity. The index says that despite the recent easing in food inflation, food prices remain very high and will continue to dampen the real purchasing power of consumers. FNB economist Jason Muscat says that hopes of better confidence in the second quarter were dashed in the wake of the sovereign credit downgrades following the cabinet reshuffle at the end of March. The South African economy is at risk of a protracted weak growth and further fiscal pressures if those confidence levels don't recover fast. And that's according to Old Mutual Investment Group's economist Rian Le Roux. He says that in a short-term priority, government needs to reassure investors and consumers over the future direction of policies.
While it looks like the economy may pull out of the technical recession in the second quarter, there is concern of weak growth over the medium term. Le Roux says their economic growth forecast is 0.8% for the year. He says South Africa's fiscal consolidation path faces significant risk should the economy fail to recover materially over the next few years. He says urgent confidence recovery is vital for South Africa to avoid continued decline.
It's absolutely important that we get greater certainty as to future economic policies, and that policies will not deviate significantly from what we've had in the past. If that's the case, I think confidence will come back, and confidence always is a crucial element in economic growth over the medium term. I think the second risk we face at the moment is that the global environment, which has been relatively good for us over the past 2 years or so, that might turn a little less supportive, simply because central banks are saying that they are going to start to roll back the quantitative easing that they've had in place for quite some time. So if the world becomes a little bit more difficult, it becomes so much more important that we restore domestic confidence.
The uncertain environment and emergence of low return continues to challenge investors in their search for yields.
A lot of people are looking at the currency. The rand has become quite volatile. And also linked to that is what's happening in the political environment. So people are questioning now what's happening in South Africa, which direction are we going? We've got elections coming up in a couple of years' time. A lot of different political parties and infighting within political parties. That seems to be getting headlines at the moment, and that's impacting people's thinking. So people are saying, well, which companies are most sensitive to rand volatility and rand fluctuations, and which are more defensive?
Old Mutual believes South Africa is still at risk of being downgraded further into sub-investment grade. Gloria Safakomosi, SABC News, Johannesburg.